Bitcoin's computing power is at full capacity, institutions are aggressively buying, and funds are being loaded in advance. Is a major earthquake in the crypto market coming? Are corporate cryptocurrency hoarding a treasury or an illusion? Changping Zhao warns. It is a double-edged sword. Justin Sun made a huge profit of 230 million yuan from WLFI. Is this a sure thing or just an illusion? The global crypto regulatory conflict intensifies as boldly imposes a 23% tax. Could this be a game changer or a disastrous move? The global crypto landscape is completely reshuffled. Who is the new encryption overlord?
In the US, the Coinbase Premium Index has been flashing red several times over the past month, soaring to plus 0.1 at the end of August. Institutional investors have been outspoken, declaring they'll buy at a premium, no problem, a classic case of money leads the way. However, things have been cold in South Korea. From late June to mid-August, the index remained almost entirely negative, even dipping below minus 2% in late July. Retail investors are wary. Even a brief surge of plus 2% at the end of August quickly fizzled out, a typical short-term trend. US institutions are steadily supporting the market, while South Korean retail investors are hesitant and waiting. If the South Korean premium could ever climb back to plus 1% to plus 3%, aligning with US institutions, Bitcoin could truly experience a global surge. USDT is making big news again. On August 22nd, its daily trading volume soared to $77.8 billion, a record high since the Luna debacle in 2022. Even more impressive, its 30-day moving average also set a new record. The surge in trading volume in 2022 was driven by fear, a panic sell-off. This time, however, is completely different. Smart money is quietly increasing its positions at low levels, clearly positioning itself in advance. Tron, in particular, is experiencing rapid capital flows thanks to its low transaction fees, making cross-chain arbitrage as smooth as riding a high-speed train. In short, this isn't a market panic, but rather a reload of funds by major players. The signals from smart money are clear. Major volatility is coming. Buckle up, everyone. Please like and follow us to sort out the latest developments in the cryptocurrency, blockchain, and mining circles within 24 hours. Click the small bell to join the channel and become a member. You can receive the Member Wealth password from Monday to Friday. In recent years, the capital market has developed a new way of playing, the digital asset treasury. DAT companies not only hold on to US dollars, but also directly convert funds into Bitcoin and Ethereum and add them to their balance sheets, pledging them, running nodes, and building liquidity. This whole operation is quite a busy one. In 2020, software company Strategy was the first to adopt Bitcoin as its company treasury, setting an industry benchmark. Later, people discovered that Ethereum could also be used as a reserve, and the DAT story expanded from Bitcoin to Ethereum, and then to BNB and Sol. Even more interesting, there was a division of turf. Asian Capital and Binance actively promoted BNB, while American institutions aggressively attacked SOL. The result was the official start of the enterprise-level hoarding war.
The Caliph city of Bhutan announced the inclusion of BNB in its strategic reserve assets, becoming one of the earliest examples of a digital asset being included in an official reserve. Zhao Changpeng emphasized that this is a multi-currency reserve portfolio consisting of Bitcoin, Ethereum, and BNB.
Some people will want to use the DAT company and say, look, it's a public company, but they just do a big crypto treasury, Bitcoin treasury to pump up their stock price. That's obviously not too good.
Nano Labs announced that its BNB holdings have increased to 128,000 and proposed a diversified reserve strategy. U.S. Wall Street institutions prefer SOL. According to strategic SOL reserve data, 13 institutions hold a total of approximately 8.689 million SOL, primarily in the hands of a few large players.
And many of them don't have good management around how to handle cryptocurrencies, and some of them have more complex structures where they hold a basket of cryptocurrencies. Now, who's going to maintain the basket? Who's going to maintain the balance of it? Some of them even do additional stuff like investing the funds raised in crypto companies, etc.
The BNB and SOL treasuries are pursuing completely different paths. The Asian market for BNB uses a straightforward, direct strategy. Buy more, build an ecosystem, and engage in collaboration, simple and straightforward. Wall Street's approach to SOL is different, with its relentless financial wizardry and complex financial engineering, leaving viewers bewildered. It appears these treasuries aim to package digital currencies like stocks to attract traditional investors. The problem is, however, that their so-called increased holdings often don't involve actual spending in the secondary market, but rather over-the-counter share swaps and formalities. For prices to truly stabilize, they must rely on ecosystem expansion and real demand. Otherwise, it's like fireworks, initially blazing with excitement, then fading in the blink of an eye. The Trump family once thrived through real estate speculation, but now, thanks to WLFI, they've been thrust into the cryptocurrency world. CMC's data is compelling. Its market capitalization soared to $9.86 billion at opening, with $1 billion in trading volume in a single hour. Today, its market capitalization remains stable at $5.5 billion, completely altering the trajectory of the Trump family's wealth. To put it bluntly, WLFI isn't just a new tool to help them count their wealth. It's a reminder that cryptocurrency is no longer just a financial game. It has entered the political arena. Who dares to ignore it?
Early investors reaped a huge victory on WLFI. Tron founder Justin Sun, one of the largest independent investors, received approximately 600 million WLFI from the token unlock yesterday. Based on the initial presale price of $0.015 and the opening high of $0.3998, his paper profit reached $230 million. However, Justin Sun specifically stated last night that he had not sold any of his unlocked tokens and would not do so in the near future.
The popularity of WLFI is no surprise. Trump campaigned daily for it, promising to make America great again. Once in the White House, he was even more decisive. He eased regulations, signed bills, and roped in his cronies, completely throwing the crypto market wide open. The WLFI team, undeterred, declared, "We're not a meme coin, we're a governance token, complete with a $1 stablecoin and mobile app." Doesn't this sound like a crypto Apple ecosystem? The problem is, while this may truly be the Trump family's most valuable asset, it's unclear whether it can hold its own amidst the political turmoil and market volatility.
A 5% discount cannot stop a 23% increase. Will Ukrainian retail investors buy into it or run away? Global crypto trading volume surges, India wins for 3 consecutive years, and a dark horse emerges in the Asia-Pacific region.
The world is currently engaged in a virtual crypto regulatory relay race. The EU's MiCA jumped in claiming, "I'll take the lead." The US, on the other hand, is promoting spot ETFs while also considering a national strategic reserve. Hong Kong has gone all the way to licensing. Singapore and Japan are tightening their belts on stablecoins. Brazil is even more aggressive, abolishing tax exemptions in June and imposing a flat 17.5% rate on all crypto gains. Denmark, even more outrageous, has proposed as early as 2024 that even if a coin's price increases, it will still be subject to a floating profit tax. Now Ukraine is joining the fray, threatening new regulations. It seems the crypto regulatory drama has only just begun, and it's poised to get even more exciting.
This is huge. President Zelensky signed this bill to legalize crypto and provide a legal framework for its existence in Ukraine. And why did this occur? It occurred on the as a backdrop of massive donations are pouring into Ukraine in the form of crypto.
Ukrainian MP Yaroslav Zelezniak stated that the parliament passed the bill legalizing and taxing cryptocurrencies on its first reading on Wednesday, with 246 MPs supporting it. Cryptocurrency income will be subject to an 18% income tax and a 5% military tax, for a total of 23%. However, in the first year after the bill takes effect, converting cryptocurrencies to fiat currency will be taxed at only 5%. Individual tax payments will be calculated based on sale proceeds minus purchase costs. Digital assets purchased before the bill takes effect can still qualify for the 5% discount if sold before the end of 2026.
Ukraine's move is truly bold. Not only is it imposing a 23% tax, but it also requires service providers to register and submit annual reports. The question is, who will oversee it? Whether it's the central bank or the China Securities Regulatory Commission remains undecided, and the bill will likely face several rounds of deliberation before reaching its second reading. While other countries regulate out of fear of financial chaos, Ukraine is going the other way, going all in on crypto before the battle is even over. The logic is straightforward. If the tax system is truly implemented, it will not only restore fiscal revenue, but also potentially attract foreign capital. To put it bluntly, it's a risky gamble, but if it pans out, it could be a brilliant stroke of genius. With just one nod from the US, Bitcoin's price surged past $100,000. After all, the White House had just signaled its intention to establish a clearer regulatory framework for crypto. And incidentally, it also gave the green light to stablecoins. Chainalysis's latest report followed suit, laying out the crypto investment landscape for 2025. Bitcoin remains a stable, standard asset for both new and experienced investors. Layer 1 tokens have completely exploded, reaching a market capitalization of $4 trillion. Stablecoins are poised to break the $1 trillion mark, becoming a favorite of governments worldwide. Even meme coins have attracted $250 billion, with both investors and institutions rushing in. The current crypto market is flourishing, with everyone vying for a piece of the action.
The report shows that India maintains its top spot in global crypto adoption for the third consecutive year. Driven by the surge in spot crypto ETFs and increased regulatory transparency, the United States jumped from fourth to second, ranking first globally with $4.2 trillion in trading volume. Among emerging markets, Pakistan rose to third, with Vietnam and Brazil ranking fourth and fifth, respectively. Asia-Pacific led the way with a 69% growth rate, receiving $2.36 trillion. South Korea's trading volume reached $1 trillion, and the Philippines and Thailand rounded out the top 20.
And seeing the transaction volumes across the world really rise across a range of different use cases. And so, it's a really sort of exciting time where cryptocurrency markets are not the only focus, and we're starting to see crypto rails be used in terms of being the bedrock of a future financial system.
India, leveraging its large population, advanced technology, and the demand for remittances from its diaspora, has firmly established itself as the largest crypto player. The US is even more aggressive, leveraging the explosive growth of ETFs and a regulatory overhaul to transform itself from a follower to a dark horse. Previously, banking giants shunned crypto, but now JP Morgan Chase and Goldman Sachs have jumped in, and even the most conservative pension funds are secretly hoarding Layer 1 tokens. This has caused regulators around the world to panic, fearing they might be left behind. For retail investors, the upside is that ETFs and Layer 1 tokens are readily available, making entry much easier than before. However, the downside is also clear. Once institutional investors enter the market volatility can be as thrilling as a roller coaster, so buckle up if you dare.
He claims tariffs are the key to America's prosperity, and if he loses the international tariff case, the U.S. could fall back into poverty. Now the Supreme Court will take over this drama. Whale Alert has captured the resurrection of an ancient monster. A wallet that had been dormant for 12.8 years suddenly woke up today, revealing 479 bitcoins worth $53,683,600. It seems veteran cryptocurrency players are definitely ready for a big move. Citigroup calculated that by 2030, 1/10 of global transactions will be powered by digital assets and tokenized securities. This means that in the future, you won't just be buying and selling stocks and bonds, you might also be buying bricks on the blockchain. Today, Jupiter is releasing an airdrop detection radar, airdrop checker. With just one click, you can check for airdrop opportunities in the Solana ecosystem that you might have missed. It's truly a great tool for grabbing the best deals. The information broke the news that Polymarket, a leading prediction market player, has received an admission ticket from the US CFTC and is about to return to the US. CEO Shane Copeland personally tweeted the official announcement, officially launching his return show.
Okay, that's the main content of today's program. Our channel focuses on valuable news in the cryptocurrency, blockchain, and mining circles, including news information and in-depth special reports. If you think our channel is valuable, you are welcome to forward and follow us. You can also become our member and receive the member wealth code from Monday to Friday. Let's get rich together and add a zero to our assets in the bull market. See you tomorrow.